This analysis was published 3 weeks ago on a Tuesday morning before London session. The setup is really simple. Confirmation is used as entry, invalidation is used as stop loss, and target is where we take our profit. Most often than not, I inform members to move the invalidation point closer to a certain point. Once we have confirmation, meaning once we enter that trade, we move that stop loss to this high. We will be using Elliott Forex Money Management Calculator. Of course, you can use any other calculator you are familiar with. The thing is, this one is very simple, and I am familiar with it, and it's for free. Please give me a second while I get my browser ready. So we will start by feeding the required info into that calculator. First off, currency pair, which is British pound US dollar. Entry price or confirmation point is at 1.6126. Stop loss or invalidation is at 1.6185. And take profit. We have two targets on that chart, and we will first do the first target, which is at 1.6067. Last thing, in the last box, we will enter our account balance, which is $10,000, and we will hit generate results. First information is about reward to risk ratio. And we now know that we have 1-to-1, and the calculator informs us that it's okay to continue with this trade. Next, we see how many lots we can trade. Of course, we are concerned with the micro lots at the lower end of this chart, of this page, and we see that we can trade 67.8 micro lots. We will round up that target to 68 lots, and we write that down and start calculating for our next target. The only field we are going to change is the take profit field, since every other criterion remains the same. So the second target is at 1.5994, and let's generate results. Now, our reward to risk ratio on this trade is 2.2 to 1. You see, for the second target, the reward to risk ratio changed to 2.2 to 1. That's because we changed the take profit. Now, we can tell that this target provides us with much better reward to risk ratio. It's more than 2, which is an ideal reward to risk ratio. Since our entry level and stop loss remain the same, we end up with the same position size, which is 68 micro lot. With that, the calculator's job is done, and we move to our terminal and place our order. I'm already saying it right. Waiting. By the time the bound reaches the second target, we lock in $897, which equals to 9% of our capital just in one single trade. If that trade did hit our stop loss, we would only lose 4% of our capital. Let's see how to use the mathematical formula. First of all, we calculate risk in pips, which equals to 59 pips. Second on, we calculate reward with the second target, which is 132 pips. Reward to risk would equal 2.2, and then we calculate the lot size based on 0.04, which is our fixed fractional, and the $10,000, which is our capital. Risk in pips, which equals to 59, multiplied by 0.1, which equals the mini lot scenario, and that would equal 0.68 lot. Using money management is really powerful for traders that have access to leverage and are showing consistency. With money management, traders don't need to go after the big windfall profit and home runs. But instead, we can focus on small conservative goals. Money management cannot turn a poor strategy into a winning one, but it can make a good strategy great. Thank you so much for being such a great audience, and I really hope you enjoyed this webinar as much as I enjoyed preparing it. Thank you so much. If you have any questions, I am here to answer them.